Risk assets are rebounding this morning on Thursday. Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com, joins us to break it down. Chris, welcome back. Now, you and I spoke, every time we speak, it's either you're at the cusp of a market breakdown or it's happening. So right after you came on last time, we had basically Bitcoin falling by 20 to 25%. Stocks have been topping. Gold has done quite well. We'll be touching on all these asset classes today. Let's start with Bitcoin. I'm looking at my screen right now. It's up 14%. It's back up above $40,000. It retraced 30,000 yesterday. It's back up. Is this a dead cat bounce, Chris?
At this point, I think it is a dead cat bounce. Now, there's such a big drop in Bitcoin that this could be a pretty big dead cat bounce. But overall, I mean, when we look at the price action, how Bitcoin's moved, where it is within an overall kind of stock market or asset cycle, I do think it's going to be out of favor for quite a while. We might actually see it be dormant for a year or two from this point going forward. So I think there's upside potential still, maybe get back up to that 50,000 mark from where we are, but overall, it's I think the wind's been taken out of the sails, and it's gonna be quite a battle from this point forward.
Okay, let's elaborate more on Bitcoin. I know you've got some thematic charts you've prepared for us to elaborate more on this. Let's take a look.
Sure. So let's take a look at this. So there's an overall stock market cycle, and this is kind of on the left here. This is kind of the investor kind of belief system, how they feel as the stock market goes through like a bull market, a euphoric kind of everyone piling in, everyone's a genius, everybody's rich, and then it has some big collapse. And then we go into this complacency rally, which is really just a bear flag. And then it starts a new downtrend and falls out of favor for a long period of time. And I feel as though this is where Bitcoin is. This is also where some other stocks are, like Tesla is forming the same type of pattern. And what's really interesting is when you start a new bull market, you get these explosive rallies, pauses, and continuation moves when you start a new major uptrend. Well, the same happens when you start a new major downtrend. You get massive collapses in price, and then you get a dead cat bounce, a denial or anxiety kind of bounce of play. And then, of course, it continues lower in that new downtrend. Now, for example, if we were to flip back to Bitcoin here and look at this price action where it's gone completely parabolic, if we zoom in here, you can see how it's gone into this strong uptrend where it was kind of a circular saw blade, a rally, pullback. Eventually, we had this first initial big crack, and it broke a couple critical support levels on the chart. You and I have mentioned this before. And then it went into this kind of bear flag, this complacency move. And the last time you and I talked a few weeks ago, I said, this is a very, very neutral to bearish sign. This has a good tendency that it could play to the downside. If it drops, it could go to 30,000 because it's going to be the start of a new major downtrend. And of course, it came all the way down to 30,000 on that news from Asia, China creating that kind of limiting who can get into cryptocurrencies, create this wave of selling. And now we're in this big drop, and we're in this kind of denial, kind of dead cat bounce type of play, which could linger on for a while, but eventually it is pointing to, a big sideways consolidation or another big drop. So that's where Bitcoin is. Tesla's actually got a very similar chart. It's on the verge of breaking down for a new leg as well, which is a bearish sign for the stock market for sure.
Hold up. Let's talk about Tesla and the stock markets in just a bit. Can you go back to that BTC chart? And I want to talk about that blue line you drew. All right. That squiggly blue line you drew. All right. People might say, well, he's just doodling. No, you're not. That's a very important trend line you're drawing here. Where is that pointing to, Chris?
Yeah, so we don't know where this blue line is going to really end until we see this rally, this move to the upside. And wherever this rallies to and then starts to reverse lower, that's when we can apply technical analysis and get an idea of where this downward momentum is going to carry us. But I wouldn't put it past this pattern here that it could very easily go down to 20,000 or potentially all the way back down to around 15,000. It'll completely wipe out this euphoric, crowd-based, herd mentality move, just like we saw on this chart here, where something will go all the way up Eventually it cracks, breaks to the downside, and it'll come all the way back down and then go dormant for usually a year or 3 or 4. Some commodities go dormant for a decade. So we just got to take it one kind of pattern at a time. But at this point, we're looking at potential 50,000 up here, which is a very significant level on the chart. It's also a whole number. Typically, investors, traders, when they see a whole number like 50,000, they're going to either be shorting it because they want to get out. They think it's resistance. If it breaks 50,000, they'll be like, okay, it's broken 50,000. I want to get in. So there's a lot of things that are going to come into play eventually, and we'll be able to figure out where the next downside move is, depending on how this plays out.
So we're at 41,000 today, right now, as we speak. Basically, you're saying we've got another $10,000 of upside before crossroads is met. Is basically your summary right now. Okay, perfect.
Yeah.
Can we apply some numbers to that other chart, the cycles chart that you just showed? Yeah, that one here. So complacency, anxiety, denial, panic, disbelief, depression. That just sounds like life, Chris. That's just the various cycles of life.
The stock market is just a life cycle. It's just people's emotions, right?
Let's apply some numbers to these different phases of this cycle here. So where are we currently again?
We are somewhere here in this kind of anxiety, potentially the denial phase, where we don't really know where we are. All we know is a new downtrend has started, and we need to just wait to see what kind of technical pattern unfolds over the next 1, 2, 3 weeks, and we can get an idea of where the next downside move will be, or maybe it's going to build a bullish pattern versus a bearish pattern, and maybe it's actually put in a bottom. So we need to see where we are. But right now we are in this anxiety denial phase, and there could be a lot more unwinding. I mean, this news just hit about cryptos in Asia. You're not allowed to trade them, own them, even get rid of them. You can't even close your positions. That's an early move. There's a lot of money over there that'll want to get out of the cryptos potentially. And that money's going to go somewhere. Obviously, China's big with gold. We saw gold do fairly well yesterday, considering the bloodbath in the market. So, I mean, all these things, when money comes out of somewhere, it's got to go somewhere else. So that's going to be the next part of the equation, right?
Did you write these captions yourself? They're hilarious. Let's zoom in.
Yeah.
Anger. Who shorted the market?
Swearing on there.
Why did the government allow this to happen? Why did the government allow this to? Although, to be fair, the government was partly to blame for Bitcoin's move downwards this past week. Well, specifically news coming out of the Chinese central bank. Depression. My retirement money is lost. How can we pay for all this new stuff? I am an idiot. Well, we can pay for all this new stuff with Biden's stimulus checks. That's how we're paying for all this new stuff. Disbelief, exactly. This is a sucker's rally. Okay. I mean, that sounds like, what's the difference between disbelief and optimism here?
Optimism is people go from a hope stage where their hope stage is kind of somewhat like disbelief over here. You're kind of just hoping this is a new rally that's going to start, but it hasn't really taken place yet. Optimism is very similar to kind of denial in a way. You're still really just hoping and holding on. You've been through the roller coaster. It's been a nightmare. It's years and years later. Your money's still underwater. You're just hoping it's going to come back. But people start to get more excited because price is holding up. So people are a little more inclined to start putting a bit more money back into the stock market. And then when it starts to take off, people actually go, they believe, they go, oh, this is a real deal. We're hitting new multi-year highs. We're going back up to all-time highs. People start to pile in. Mm-hmm. It becomes a thrill, and then everyone does it. It's like mainstream media. And then eventually big money or something happens, some type of event that crushes the price, takes the wind out of the sails. And then people don't believe it. People are still in buy the every dip mode. And eventually they get caught at the anxiety denial phase, and then it sells off so much they're like, well, I can't sell it now. This is crazy. And then they eventually probably panic and give up on it somewhere through this basing formation. They're like, this is dead money, get me out. And then the whole cycle starts again without them. So it's a pretty painful cycle that most investors and traders go through. And this same pattern happens on a 1-minute chart when you're day trading. This is all applicable to any time frame.
Yeah, your emotions just go on a roller coaster there. Now,
Yeah.
if you're day trading, I can understand that. Chris, let's talk about before we talk about stock, let's talk about how you be positioned now. Putting this all together, you're expecting 10K of downside, but potentially resistance at the 50K level. How would you be positioned if you were to trade?
If I was positioned in here, I mean, I wouldn't be positioned, to be honest. I mean, this isn't. I don't like to try and pick a bottom like this, because this is, you never know where the bottom is. The bottom could, this is a dead cat bounce. It could be a 1 day oversold bounce. If you take a look at this, we had a great big drop right here. We had a 1 day bounce back up, and then it just collapsed and continued. And that's pretty much what today could be. So you don't know where the bottom is. Where I would be looking to get positioned would be somewhere right over here. When price starts to work itself up and gets into this area, we've got a lot of price action through here. We got lows. We've got a lot of bars that are trading through here. When it gets somewhere up into this range and starts to show signs that it's starting to break down and roll over, and I see some big selling volume step in, that's when I'd be more interested in potentially trying to profit from falling price. I don't really want to buy something that's in a downtrend, and I also don't want to try and pick a bottom when something's in a downtrend. So you're better to wait for it to bounce, lose momentum, and then to get on the short side as it starts the next leg lower.
All right, let's move on to the stocks now, the equity markets. Another bounce today. How can we apply the same psychology to what's going on right now?
Right. So stock market is in still quite a different cycle. I mean, the SP 500 here is holding up. This blue moving average is the 50-day moving average. It came down yesterday, tagged that level, bounced back up. Overall, the stock market, it's lost a lot of wind out of its sails as well. We're seeing half of the sectors that I follow are negative. They're in a downtrend. So that means the market is definitely limping along here. There's not a lot of power behind it. If you look at the NASDAQ even, it's been kind of much more bearish in terms of big choppiness. It looks like it's forming a bear flag here and could very easily continue to head lower. Overall, the stock market to me is in a risk-off mode. You don't really want to be in stocks right now. Everything is turning bearish. We're seeing gold, utilities, and bonds are holding up fairly well. Really, they're doing better than the stock market in some regards. And when that's happening, that means big money is definitely moving out of the stock market and they're moving to these defensive plays. So I'd be very cautious in the stock market right now. We moved to cash a couple of weeks ago because this started to show signs that we're getting very weak. And we're not looking to get back into the stock market until the stock market gives us a new buy signal.
How much cash, percentage-wise?
We right now in our trading account, we're 100% cash. There's no point in riding a roller coaster. I mean, if the overall averages are heading
Chris.
down.
You should have led with that. Okay. All right, Chris, let's talk about that. You're in 100% cash. You're not deployed right now. Walk us through your rationale. Are you waiting for a buying opportunity, or are you saying to yourself, there are no buying opportunities for the foreseeable future, I'm just going to stay out? And if so, why wouldn't you be shorting? So a few questions for you to address there.
Sure. Okay. So long story short is, let me just flip over to, let me go to the SP 500. So this is one of my index trend trading systems. And more or less, when it's green, you want to be long the stock market. You can be long pretty much any stock. Ideally, you want to be long the best performing sectors. That's my band trading strategy. We try to get in the best assets now. They outperform. When they turn red, that means the market's unfavorable. It could collapse or it could go dormant for a while. And there's no point in holding on to it when all the technicals, the underlying intermarket analysis are saying, hey, there's a lot of risk here. We don't know if this price is going to go higher. There's not a lot of power behind it. Move to cash. So when it's red, we're more or less in cash. And you don't really want to short a market here. Let's just zoom back. The odd time you get one of these big market corrections, they're very rare. If you can short it, you've made money. But if you take a look at these other red bars on the chart, this is the SP 500. By the time the trend technically turns down, there's only 1 or 2 days that it actually falls lower. In most cases, it just trades sideways and goes out of favor and then eventually goes higher. So you could try to short it, but the odds are it's going to be a one-day move, and then you're just going to be holding through a roller coaster. You're probably going to get out for a small loss, and then you got to get long again. Happens over and over again. You don't really get a follow through. This one, there was a little bit of downside. This one here was you got a 2-day pullback. There's not enough downside in a bull market to try to short it unless you're trying to pick tops. Then there's some room for it to collapse. But I mean, if you're trying to pick a top somewhere in here, I mean, it just keeps going up and up and up. And then when you finally do get a downtrend, you'll be lucky if you get out at break even and get some of your money back. So I don't play that game. I don't short the market. Sometimes when it collapses like this, you can take advantage of other plays like the bond market. When this stock market collapsed, we actually moved to bonds. They gave a buy signal. Bonds rallied 20%. So, and a lot of times these red bars here, when the stock market goes red and unfavorable, bonds typically rally. And that's where we can move our money to. And when we go to today's price action to take a look at where we are, this market, even though it's rallying today and people are feeling good, it's not looking so good from a technical standpoint. We actually on the SP 500 are getting a sell signal saying, hey, move to cash. This rally has got a high probability of trading sideways for 1 week or a couple months, or potentially collapsing a lot lower. So all these things got to be taken into account. I don't short because of what I just explained. And the stock market is kind of walking this fine line of going into a much deeper correction. There's potential for about a 15% downside move in the SP 500, but we're not taking a stab at it because the odds are it'll just be some choppy sideways noise. And I'm not gonna risk money trying to short something that's still in a raging bull market in terms of a short-term trader.
Oh, Chris, I before I let you go, I have to ask you, as a trader, just psychologically speaking, are you hurt more by missing out on a rally when you're on the sidelines, or deployed when you shouldn't be?
It hurts a lot when you miss out on a rally. It really sucks, but it feels so good to be in cash when the markets are chopping around and collapsing. I mean, the thing is, sometimes we get out a little low, we have to buy back in a little higher. But the thing is, if the market does collapse like it did in COVID and many other times in the past, we are back in cash. You'll be a lot further ahead by simply moving to cash when the market's not favorable, buying back in at a later price, even if price is higher, because then you're getting online with the trend again, and you can ride those trends. Trends typically last a while. And the nice thing is moves like over here, where it has a quick rally up and pulls back. Well, we traded some of the top sectors, and even though the stock market pulled back over here and came back to pretty much the same price level, the leading sectors actually continued to move up and hit all kinds of highs. So the key is not just jumping into any stock; it's finding those market leaders, the best assets now, and that's how I more or less play the market. And sometimes I'm in cash for months at a time. You look at the COVID crash; this was a month and a half of sitting in cash while everyone was on that roller coaster ride. And people think they need to trade a lot, and it depends on your trading strategy. But I'm all about the fewer trades I need to do, the better. And I'm trying to focus on drawdowns that are a lot less than the stock market, and I'm trying to outperform the stock market. So I try to create the most efficient trading strategy there is, and this is one of the most efficient trading strategies I've ever had. It's very few trades per year. We trade the index and bonds, and that's it. It's that's how I see the market. I don't want to day trade. I don't want to be in and out of 1,000 stocks every year. I like to just play the game as efficient as I can and not tinker around with it.
Yeah, Chris, why would the index collapse? So you use that word a couple of times. You're concerned about a significant move downwards. I mean, we're at a point where, I don't know. Help me find a trigger here.
Well, you never know when the stock market's going to collapse. I mean, we can go back in time, and when you look at all these sharp red pullbacks, these are all market collapses. I mean, 15% pullback in the SP 500. I mean, while it sounds pretty big, I mean, in the grand scheme of things, where is it going to be? It's going to bring us right back down to this last consolidation. It'll be one of these big, pullbacks in the market. and then it could just continue to go higher. You never know what kind of news event is going to happen. You don't know the reasoning for it until after it happens, right? So, or until it's midway happening. You just have to be prepared, because when the market collapses, it drops really fast. And if you're a few days too late, in a way, it's like almost too hard to get out, because it's dropped so far, you think it's going to bounce at any point. It's a really tough game. If you can't manage your positions and get out on time, you are getting out probably near the bottom, unfortunately, but you never really know where that bottom is. So it's a tough game trading. It's all about position management, understanding the trends, and knowing when to be in and when to be in cash.
Okay, Chris, well, when you're ready to be deployed, give me a call and we'll talk about your next trades.
Sounds like a plan, David.
All right. Very good. Thank you very much, Chris, for coming in today. Thank you.
Yep, thanks for having me.
And thank you for watching Kitco News. I'm David Lin.